So when it comes down to the model companies themselves, they're horrifyingly unprofitable. I think OpenAI lost like $20-something billion last year. Anthropic's probably not far behind this.
Why do you think OpenAI and Anthropic shouldn't be allowed to go public?
Because they are lossy companies. They do not have a path to profitability. Anthropic, they leaked, or however, that they were profitable. They were profitable in 2 months when Elon Musk gave them a discount on their compute through SpaceX. Clearly planned leaks, clearly planned financial engineering. No normal profitable company does things like this. OpenAI and Anthropic are both horribly unprofitable, and they are not getting better. So you've got a thing where you can't measure the costs and you can't measure the return on investment. What do you call that? You call it a thing without an ROI.
What are we getting? I don't want to say we. What are the bulls out there getting wrong about AI? Because you've made no secret that you don't see any there.
Yeah. So I think people are conflating a semiconductor rally with an underlying successful business, which doesn't really exist. Anthropic's current revenue growth, which is deeply questionable, and the fact that they leaked profitability, manipulated by Elon Musk, of course, their growth is coming because people cannot measure how much an AI task actually costs. And a couple months ago, Anthropic started charging their enterprise customers the actual token rates. What this has led to is suddenly businesses are going, oh, how much money are we spending? I think it was Uber's COO, Andrew McDonald, said that they're having trouble justifying the AI spend based on the actual return, that one can actually measure it. So you've got a thing where you can't measure the costs and you can't measure the return on investment. What do you call that? You call it a thing without an ROI.
Isn't it, though, safe to say, Ed, I think about this, I agree, that there is going to be, when there's any new technology, there's a lot of money thrown at something, right? A hot new idea, whatever it is. And that ultimately, we've talked with some experts in the AI world, they're saying all of these large language models, not everything's going to exist. Because right now, it doesn't cost you anything to use it. But at some point, there will be a cost. And people will start to select what they want to play with. And so is it a case of right now, at some point there will be some winners, some losers, and we'll see some things filter their way out, and that there will be some return on investment for some of the larger players when it comes to AI? Do you not see some winners and losers in this, or some winners in this?
I think the winner is Jensen Huang, and the winner is the construction firms who have got prepaid for all the data center construction. Maybe Sam Altman and Dario Amodei have become billionaires through this. But when it comes to the actual businesses, you can't find anyone who can measure the ROI because you can't do it. So when it comes down to the model companies themselves, they're horrifyingly unprofitable. I think OpenAI lost like $20-something billion last year. Anthropic's probably not far behind this.
And we don't have access to their books.
Of course. But this is based on
file for an IPO.
And that's the thing. When we see these S1s, I think it's going to be kind of a massacre, because I think that people have this view that these companies are becoming more profitable or even have a path to profitability, and they don't have one.
But somebody could say, and Carol, we talk about this all the time, Amazon for years didn't really have profits.
Well, that's the thing.
Now it's a behemoth, and now it's then AWS came along, and now it's this juggernaut that has made a lot of people very wealthy.
But the thing with Amazon is, between 2003 and 2017, Amazon Web Services, actually all Amazon capex, was around $57 billion normalized for inflation.
Between that whole time?
In that entire time. Wow. And they were cash flow positive in 9. The classic thing with the .com reconciliation thing is, well, things went poorly, but after that there was useful infrastructure. No such story exists here. GPUs, AI GPUs specifically, have very few other use cases. And on top of that, if you're talking about incomplete data centers, it's going to cost just as much money to finish them today as it will in 10 years. And similarly, a Blackwell, a B200, GB200 rack, NVL72 rack, for example, will cost just as much, if not more, in electricity 10 years from now. There is no pick up and fix this story. Perhaps there'll be some on-device large language model use, but we are talking an industry that has absorbed over $1 trillion in the last 3 years. The media attention from everyone, and these continual stories about the magic of AI. But when you say, hey, is it making any money? They go, oh, no. Oh, we couldn't possibly. We don't do that yet. But don't worry, Uber lost a lot of money. Uber burned about $32 billion, which is less than half of what Anthropic has raised in the last 6 months.
So I think it's safe to say there's a lot of smart investors who are in this, smart companies who are in it, right? Who pick your big hyperscaler. They obviously want to be around for a long time. So I'm just like, how do you explain their bets on all of this?
So I have this theory called the .com bubble, which is the hyperscalers are out of hypergrowth ideas. We haven't had a new iPhone. We haven't had a new cloud computing. We haven't really had a new platform that would turn into the next the next Google search or Amazon Web Services. So they thought that large language models were going to be the panacea, that they were going to be creators of API growth, that they were going to be the new infrastructure play, load up the GPUs, sell access to everyone. The problem is no one checked to make sure any of this was profitable. And we still don't know if GPU compute is actually margin positive, which is crazy considering the amount of money going into it. And when we look at the companies that actually are selling it, CoreWeave, for example, they burn billions of dollars, 20-something billion dollars worth of capex this year, about the same amount in debt, and their customers are Nvidia, OpenAI through Google, OpenAI through Microsoft, and Meta, who does not have an AI strategy. It's very strange, like that Twilight Zone episode with the scary child. Like, we're all trying to pretend that Meta actually has a plan here. They don't have one.
So is Apple kind of smart? Because we've talked with our Mark Gurman about this. Have they kind of been relying on Google, right, and Gemini, and not necessarily doing that big spend?
And they're not doing any capex on.
No, exactly.
Well, I think what happened with Apple is they released Apple Intelligence, which may be the largest scale anti-tech radicalization in history. My non-tech friends, I've heard nothing about AI from them. Moment Apple Intelligence comes out, they're like, this is the worst thing I've ever used. And I think that made Apple go, maybe not. Maybe we should take a step back. But their capex is minimal. They're spending about as much in capex, ironically, as Amazon was spending on AWS way back when. So I think Apple is cautiously holding back and kind of absorbing the headline after headline, the ridiculous headline of Apple's behind in AI. Behind in a losing proposition, more like.
We're speaking with Ed Zitron. He's the founder and CEO of Easy Primary Research. He's got the Better Offline podcast. He writes the Where's Your Ed at newsletter. Ed, just so everybody's aware, do you have skin in the game? Are you shorting any of these companies? Do you have a financial interest in what you're talking about?
I invest in words. I love doing the newsletter I do. I think I'm spreading a great deal of financial literacy and of how to pull apart the narratives of these companies. But no, I don't, because the market is irrational. And the market is inherently invested in something that I think is destructive, especially the SpaceX IPO. And OpenAI and Anthropic should not be allowed to go public. They are dangerous, lossy companies that are going to be added to indices that will sink 401ks.
You know, it's interesting that you say this, because I got a text on a group chat today from a friend of mine who's like not happy about the idea that he's, as an index fund investor, he's going to be forced to have to buy SpaceX, for example, which is sort of the subject of yesterday's big take. Everybody should check it out on the Bloomberg terminal. There's a lot we want to get to with you. We only have a couple more minutes. You got to come back and do some more with us. Before you go, what happens if markets? You said markets are irrational right now. If markets become efficient, and I think a lot of people think markets are efficient. If markets view this the way that you're viewing this, what are the repercussions of that bubble bursting?
I think the majority of gains based on AI success are going away. I think the neo clouds like Iron, CoreWeave, Cypher Mining, and TerraWolf as well, all of them, perhaps not going to zero, but they're going to be shells of the corporations they used to be. I actually don't know how CoreWeave survives this. I think Nvidia is looking for the most aggressive haircut you've ever seen, for example, because they currently are not, based on research I've done, it looks like it's taking about 6 to 12 months to install a single quarter's worth of GPUs from Nvidia. They've yet to put out any kind of guidance about this. They clearly know. But if you go and look at Microsoft, for example, none of the data centers that they have announced have broken ground since 2023 have actually been finished. The Fairwater data centers, they've said that was fully complete. It's not even half complete. It's one of the strangest things I've seen in history. And I think what it is that these companies know that they can get away with it. They know that the SEC scrutiny isn't there. And they also know that the froth is big enough that everyone kind of loses together. It all comes out in the wash when it's proven that there is not a there.
Do you get calls from these companies?
No, I don't hear back from Microsoft or OpenAI or any of them.
But you reach out?
I do. I ask for comment, and I guess my email gets lost. Sam Altman, Dario Amodei, there's PR people have mentioned coming on my show, but then they go quiet, probably because I'm quite critical of them. They know I'd ask the questions they don't want to answer.
Why do you think, I want to poke at something that you mentioned earlier, why do you think OpenAI and Anthropic shouldn't be allowed to go public?
Because they are lossy companies. They do not have a path to profitability. Anthropic, they leaked, or however, that they were profitable. They were profitable in 2 months when Elon Musk gave them a discount on their compute through SpaceX. Clearly planned leaks, clearly planned financial engineering. No normal profitable company does things like this. OpenAI and Anthropic are both horribly unprofitable, and they are not getting better. They have the information reported a few weeks ago, OpenAI had a negative 122% non-GAAP operating margin in the last quarter.
But again, just because a company doesn't make money doesn't mean it shouldn't go public. Just because a company is not profitable doesn't mean it shouldn't go public.
Let me reframe this then. I don't think these companies will survive.
Okay.
And I think that investors they're doing exit liquidity for venture capital. And I think that these are dangerous, unstable companies that have faced basically no real scrutiny for most of the years of their investment. You have journalists and analysts who are actively cheering them on. This is a dangerous precedent, and it's a dangerous thing for retail investors who are being conned by this. And I mean, the whole ROI conversation, that is a result of most people experiencing AI via subscriptions that are subsidized, meaning you can burn anywhere from $3 to $13.50 for every dollar of your subscription. So people don't know how much this stuff actually costs, and they are investing and believing in it and creating workflows around it based on services they likely cannot afford long term.
Just got 20 seconds here. So we have a story. Uber has set usage caps on some AI-powered tools used by its staff to manage costs after blowing through its AI budget earlier this year. We're going to increasingly see these stories, in your view?
Yes, we will. And we've already heard a similar story coming out of Walmart. I think Bloomberg reported yesterday.
Where are we in terms of the AI narrative, in your view, and what's the reality?
Well, I think investors have to ask a question right now. What am I getting into when I invest in Microsoft, Google, and Amazon? So UBS estimates that 27% of Google Cloud's revenue this year will be OpenAI and Anthropic, increasing to over 48% next year. That is a remarkable amount of money. It's going to be over $124 billion next year. Everyone is buying into these stocks because they believe all of that capex is going towards diverse and spread out AI demand, when in fact what it's actually doing is helping create infrastructure for two unprofitable, unsustainable companies.
So the other one would be Anthropic.
Yes.
You argue. So give us more data, because you have you're citing Microsoft, but what about AWS?
Well, that was what I was saying. So Barclays actually says that this year, 13% of AWS revenue will be both OpenAI and Anthropic, and next year will be 18%. AWS, much bigger business than Google Cloud. Now, just to be clear, when I was saying that 27% this year and 48% next year for Google Cloud, I meant both Anthropic and OpenAI.
Okay.
Most people don't know that OpenAI is a large customer of Google Cloud. It's not a well-known fact, but this was actually mentioned by UBS's Stephen Ju.
So where would those companies be right now without Anthropic and without OpenAI?
Well, I have serious questions about that. So in calendar year 2025, according to my own reporting about OpenAI's numbers, 69% of the year-over-year growth of Microsoft Intelligent Cloud segment was actually from OpenAI. Without that, it would have only grown 8% year-over-year, which is barely beating inflation. And so everyone is being sold what I consider kind of a lie. It's honestly kind of a scandal.
So this goes back to, I feel like we have companies, the circular financing, the circularity of it all, and kind of creating demand for their products. So when does it start? When does I asked this earlier with the guest, when does the party end, in your view?
So with OpenAI's IPO, I think that could be one of the flashpoints. Remember, this company was meant to go public this year. They filed about a month or two ago. And now the New York Times has reported that they are delaying until 2027. That's lethal for a number of people, but OpenAI and Anthropic need continual flows of capital. They do not pay their bills out of existing cash flow. So when anything happens to that cash, I think that's the first kind of domino to fall. But then again, there's also the overall problem of data centers just not getting built very fast, taking about 12 to 36 months, depending on how small or large a data center is actually being built at. And the problem is that everyone believes that AI is coming out of cash flow, that AI is coming out of just this diverse revenue base, when it's really not. It's extremely narrow. The information reported a few months ago that 89% of the largest AI companies, well, their revenue comes just from OpenAI and Anthropic. It's heavily centralized.
Doesn't it have to be centralized to some extent? This is expensive to do, or no, in terms of data center build out and so on and so forth? And what's going to make AI, generative AI, the ability for it to be really, really good is having access to lots of information. So doesn't it have to be, to some extent, Ed, concentrated?
Well, when I say concentration, I mean concentration of revenue in these two companies.
No, I understand, but to make it good, so doesn't it make sense that those who are exposed the most, it's going to be concentrated to some extent?
Well, I mean, when we're talking about, so Sightline Climate said that they saw back in February about 190 gigawatts worth of data center capacity being built in the next few years. It was it's built or under planning. Now, if you work that out with a PUE, so just the efficiency rating of 1.3, you're coming out to 12 million a megawatt, over $1.6 trillion of annual revenue needed to satiate those data centers. Having two customers is not going to do that. Even their most spendy, Anthropic and OpenAI, well, they can't afford anything. They need venture capital, but they're only going to spend $400 billion a year. And that's if they get that far, which I don't believe they will.
How much do we know about their balance sheets, really? Really?
Well, I from personal experience, a great deal about OpenAI's, because I reported their audited financials for the Financial Times.
Right.
And it's a company just burning cash. They lost $20.9 billion in 2025, and things are only getting worse. And what's crazy as well was over $800 million of OpenAI's revenue came from SoftBank for their Crystal Intelligence, and yes, that's really what it's called, their Crystal Intelligence program, which I can find no evidence of actually anything happening. And SoftBank, a large shareholder of OpenAI with no board seats.
Go ahead, Carol.
One more question, though. Like, you talk about, for Google Cloud, the exposure, right? And you said 48% next year in terms of these two customers. I have to say that there are smart people running these companies. And normally you would say your exposure to just a handful of customers is not a great thing. Do you say that these companies that aren't doing their due diligence, be it Alphabet or, pick your hyperscaler?
I think they did their due diligence in the sense that they said, we are going to create our largest customers and we're going to own large parts of them. And on top of that, we're going to own all of their infrastructure. Google has they have a nice thing going here.
Yeah.
They buy TPUs Broadcom sells TPUs to Google. They are then sold to Anthropic and then rented back to Anthropic through Google. Google gets to double up on revenue. This sounds really good right up until you realize that Anthropic and OpenAI are unsustainable.
Yeah.
So what they may be, and the problem is with saying these are smart people, is it immediately makes me think of Enron, the smartest guys in the room.
Yeah.
Not saying anything like that's happening.
But I'm just saying you have a fiduciary responsibility. And you're right.
Yeah.
You go back to Enron or WorldCom.
Sure. And I think the point I'm making is,
yeah,
with Google, they probably thought there would be more customers. I imagine with Azure and with AWS, they thought would be more large players. But the problem with Anthropic and OpenAI is they've raised $200-300 billion of funding, but they've actually raised more because OpenAI and Anthropic got all of their infrastructure built for them by Microsoft, Google, and Amazon. They didn't have to pay. I think in the Sam Altman, Elon Musk trial, one of the Microsoft executives said that they cost $100 billion, so call it like $70-80 billion of infrastructure.
Yeah.
So the problem is that nobody else can get as big as them. No one else can get that much compute. No one else could afford that compute and have the chance to do the pre-training runs necessary, except now China's coming up behind them.
Right.
And it's unclear how anyone really deals with any of the problems I've been listing for years, which is unsustainable, unprofitable, and also not really finding the ROI in AI.
We're speaking with Ed Zitron, the CEO of Easy Primary Research. He joins us on set in the Bloomberg Interactive Brokers studio. Ed, play this out for us, because I think a lot of people think, okay, for there to be some sort of ROI on this, one thing has to happen. And like the best case scenario for all this money being spent is that productivity increases, fewer people are needed to do more things. There are some serious implications if that were to come true, and to the labor force. And Dario Amodei of Anthropic has talked about this in the past. Maybe he's talking his book. I don't know. The other side of this is, well, if that doesn't come true, then what does it mean for these stocks that have gained so much on hopes that they would be responsible for some of this productivity increase. Like, how does the shoe drop? What happens?
Well, the thing is, if you think about what Amazon, Google, and Microsoft have done, and Meta to some extent, but they're not selling compute capacity yet, is they have gone from being these cash heavy, these cash machines. They just spill out money, low cash burn, high revenue, low assets, into these bulbous GPU-filled asset mongers who are just full of these semi-built data centers for 2 customers or 3 customers at best, so that they can do what? Rent them out so that they can rent their models. And it isn't really clear what the plan is at this point. And the problem is, for me to be right, it doesn't even have to go that badly. OpenAI and Anthropic have to grow so large to be able to make all of this data center capacity good. I mean, Google's, I think, the UBS estimate was like $76 billion in 2027 of Google Cloud's revenue will come from Anthropic. How's Anthropic going to afford that? They burn tens of billions of dollars. So it's not just that these companies are unprofitable and unsustainable, but they have to grow so very large to make AI pay off, because otherwise there just isn't demand for compute at scale.